Hi, Adam Mills, broker of record for Royal LePage Team Realty, Adam Mills Brokerage here. I have John Mabry with me today from Smart Debt Mortgages. John's a mortgage broker, and I figured instead of me trying to fumble through a bunch of financial questions, I'd bring in an expert. So we have John here today. So John, thanks a lot for coming through.
No problem.
So right now in today's market, it's pretty crazy out there. You know, there's a really low supply, high demand, lots of multiple offers, lots of craziness taking place. So before we get into, all of the things that go along with that in terms of, how do I put an offer in that might be conditional or not conditional on my house selling, what do I do from the financing perspective in that lending environment? Why don't we step back to the beginning of this process, and let's just imagine I sent you right now, a client of mine that wants to get a pre-approval. They're going to meet with you. Just give us a sense of what that process looks like and how does that unfold for you?
Yeah, so I would say in this day and age, the most important thing up front would be documentation. I would say most of the time when you have issues on a pre-approval, it would be the lack of documents. So what I always do is have a brief conversation with the client first, just to get an overall understanding of the situation. And then what we do is I would request documents right away, go over that with the client, and make sure that I have every single detail off of those documents, because that is what the lender is looking for when they are going to approve something. On the flip side of that, not having documents when you're going through the pre-approval process can be tricky, because you're depending on interpretation on both parties, and then you're also, there could be differences in the documents once you've accepted them. So I would always make sure that I have a pre-approval in place with documents, and just make sure when you're working with a mortgage professional that you do have those documents in place.
So if I have a buyer who's like, oh, don't worry about it, I've been pre-approved, I have a friend at the bank, and I asked them, did you provide documents, or just give them kind of a ballpark of, what you make and how much your car payment is? If that's all it was, and in your mind, then that's not a pre-approval, like they're not in the right spot to really, jump out and start shopping for a home.
Exactly. That very well could work, but if you want to be sure, you definitely need to have some. If you haven't given any documents to someone, then you don't have a pre-approval, at least a proper pre-approval that's going to hold. I would say that by far documents are the most important. There could be anything from a car payment being misquoted as biweekly instead of monthly. Anything like that can change by a small percentage and be the difference between approval or a decline. And you want to have that out of the way on the pre-approval stage, as opposed to in the middle of making an offer.
Makes total sense. Now, like a super hot button topic, which I'm sure people ask you 1,000 times a day by email, phone, text, whatever it is. What rate can you get me, John? Like, what's a good rate right now?
Right. So
we're friends. Give me a good one.
In the past, I would say month or two, we've seen rates go anywhere from 2.59 to 309 and everywhere in between. What I would say about rates in general is that it's very, very specific to the client situation now. More specifically, risk specific. So, for instance, if you have a purchase that is less than 20% down. That is insured, and the lender is not taking on that risk, so there's a much better rate involved in that type of transaction. Depending on the loan to value, meaning how much you put down or how much equity is in the property, that can change the rate significantly as well as credit score and a number of other factors. So, getting to that point would be you really need to understand the client's situation, and you can better advise on whatever rate is available to them, because there's many different rates out there depending on the specific client's situation.
One thing that, I've heard you say it a million times, one thing that always, completely floors me is if I put 20% down or more on a property, the rate I get is actually going to be typically worse than if I put 5% down.
Yeah.
Which is, from a common sense perspective, I go, that makes no sense. I have more skin in the game myself.
Yep.
But I get what you're saying, and it's because it's no longer got CMHC or someone like that insuring this mortgage and taking the risk off the bank.
Yeah, exactly. If you look at it from a risk perspective, the bank has no risk when it's insured, and when it's not insured, then the bank is taking on that risk if it were to default. So,
right.
20%, 50%, whatever it might be, that's it's not insured.
Yeah, it's still. I get it, but it's still every time I don't know what's happening here. Okay, so let's go back. This pre-approved client, you've gone through it, boom, pre-approval's done. What's next at that point? What happens, what's the next step, I guess, for that person at that point in time, once they have that pre-approval in place?
But once you have your pre-approval in place, I think the most important thing from there is just having an open line of communication between, which I find helps most of the time, is having an open line of communication between the realtor and the client and the mortgage professional. The mortgage professional and the realtor do this every day. They know timelines, they know conditions, and it's essential in making that transaction go smoothly. If you're depending on the client to look at what conditions need to be met and what's happening, and communicating that to the realtor and back and forth with the mortgage professional, there could be something missed in between. It's not something they do every day. So I would strongly recommend that there be, an open conversation between the three parties to make sure everything goes smoothly.
Yeah, it makes good sense. I know when we work together, the nice thing is I know it could be Super Bowl Sunday, Shakira could be up on stage, halftime show was amazing. I could call you and say, hey, like I need an answer on this because we're putting in an offer right now. Sorry for the bad timing. And yes, you can jump on it and make things happen.
Absolutely.
Because you have that line of communication. So I guess from that perspective, whether I'm involved or not doesn't matter. It's you need to be in communication with that realtor.
And really important in that is that I've hopefully already talked to that client for the past couple of weeks and have everything ready to go, and it's an easy answer, and I have all the answers at that point, and you guys can make an offer right away. And that's kind of back to square one, back to the importance of just having that pre-approval early and not the day before you're looking to make an offer. It just makes things a lot more stressful for everybody. So just getting in and getting that pre-approval early is really important. It takes some of the guesswork out of everything.
Yeah, just making sure you're organized. And from you keep saying that documents, you need to have documents in your hands. Okay, so we're going to move into, I'm a buyer now. I also have a house I have to sell. Today's market should be easy to sell it, I guess, in theory. When you look at that, like how do you look at it from an approval perspective? What happens if that house doesn't sell? Like what's going to happen to me as that buyer now?
Yeah, there's a number of kind of domino effect things that can happen, but I would say most important thing about that situation is 100% the most important thing is that the customer, the client actually understands what the worst case scenario is in that situation. So if your mortgage professional is telling you not a problem, you sell your house, everything's good, well, there's a lot more to that conversation. You need to go a little bit further and say, okay, that sounds good, but what happens if my home doesn't sell? So in that situation, you would have to be looking at, okay, what is the current equity in the property? How much can we take out for the down payment, because you wouldn't have that down payment coming because you wouldn't have a sale, so you wouldn't be able to do a bridge loan. So you want to know how much equity is there. Okay, if I can pull this equity out and have the purchase amount that I need, will both work inside the ratios we need to get an approval. That's really important because I would say, honestly, generally speaking, 9 out of 10 people you would tell that to, not in such specifics, but say that your home needs to be sold, and people say, yeah, it's not going to be a problem, and
don't worry, we'll sell. It's fine.
Yeah, it'll sell, no problem, and if it doesn't sell, it's just going to be temporary. That's not a problem. Well, if it's not sold firm prior to the closing date, as far as the bank is or lender is concerned, that is still outstanding, and you're still responsible for all of the property taxes and mortgage payments that go along with both properties. So in this day and age with the stress test and just where we're at for qualifying ratios or qualifying rates, it makes it very difficult for most clients to carry two properties, but it depends on the specific situation, of course.
So even if the person's like, don't worry about it, I can cover the cost of two, I have some savings, I'll pay for both mortgages for 1 or 2 months, whatever it happens to be. Yeah. The lender's not going to say, okay, great, I'm glad you have savings. They're going to say, well, no, we have to actually approve you to own 2 individual homes for any length of time.
It's really just the expenses associated with that. If there was a situation where you had a large amount of cash where you could, let's just say, it would be unusual, but you would have, let's just say you had an open mortgage, you put all the cash against that, it eliminates the payment on that property, that would free up some room and maybe allow you to carry both properties.
Right.
But just having the money to cover the payments for X amount of time is definitely not going to work as a reason to approve it, whether it's temporary or not. It's looked at as a permanent thing, as it's just not sold firm yet.
Right, okay. One thing you mentioned too in that last piece was the word bridge loan, which I think a lot of people in their minds kind of screw that up.
Yep.
They think, oh great, I'll have a bridge loan whenever I need it, and the bank's gonna love me, and we're gonna be able to own these 2 different places.
Yep.
So can you clarify for people, what does it take to have a bridge? What does it take with your initial property?
Yeah.
And how does that bridge get built, I guess?
Yeah, so I think really just in summary on that one, the major issue is that what needs to be understood is that there is no bridge loan if there's no sale. And that's really all it comes down to. So our bridge loan takes place is when you have a sale that is firm before the closing of your purchase property. So let's just say you're purchasing March 1st and and you get a sale before March 1st on your property, but it doesn't actually sell until March 15th. Well, you need that down payment on March 1st. So what happens is you're given a bridge loan to cover that, and then upon the sale of your property, it's paid out.
I see. Okay. So in order to do it, the house I'm living in now needs to have a firm sale offer on it in order for you to build that bridge and then lend me money from that house that's sold to buy the next one.
Exactly. A bridge loan only exists because you have a firm sale, and the banker lender knows that money is coming. It just isn't coming on the day that it closes. So they give you a loan on that amount, and then upon the proceeds of the sale, they pay out that loan, and then you would get the proceeds from the difference, as usual, from the statement of adjustments from your lawyer.
Gotcha. Okay,
Yeah.
that makes good sense.
Yeah.
So the last thing that I have right now is one. Again, this is a really tough question for. It's going to probably put you in a bad spot.
Perfect.
Yeah, just to give you a heads up. We have a lot of people right now. They're going into multiple offers, and they might lose out on a couple because they're putting in conditions for financing, inspection, whatever that happens to be.
Yeah.
And then they get to a point where they say, you know what, we're sick of losing these houses. We want to get one, so we're going to go no conditions. And we say, okay, well, here's the risk associated, but if you want to go for it, you can. It's your prerogative. How do you stick handle that on your side from the financing perspective? So a client goes, hey John, I'm going to be buying this house hopefully next week. I want to go no conditions on financing. What do you do?
Same thing as I said previously. Very important that they just understand the consequences of going in without conditions. So really just going in at there's two different things. Going out without conditions is one thing. You're depending on that property being everything is good and something that a bank will put a mortgage against. Usually is not a problem, but you're also depending on the value. So if then we're talking about something that's going well over asking, there is a possibility if there's a lack of comparables or a lack of support for that value that it could come in short. So for example, if you're buying you buy for 500,000, but the closest near comparable is 420,000, and they can't legitimize more than 450. Well, you got to come up with that extra 50,000. That's that gap between that 450 that has been appraised and the 500 that you paid.
So the lender would lend to you based on like the appraised value.
Exactly.
They don't really care if you want to pay $100,000 too much. They're like, good for you,
exactly.
But I'm only going to lend you the amount that's up to the appraised value. So you could be in a position of coming with extra cash.
Exactly.
Wow.
And that's the risk with and if you're going in without conditions, if you're finding that out after, that can be a major issue because if you weren't disclosed that, you didn't talk about that. That's another thing that really needs to be talked about up front. Hey, let's just say we do 75,000 over asking here, and it only when we're 25,000 short. Do you have 25,000 to cover the rest? Do you want to be in that position? Does that work? And does that change anything about the deal? So really important to know before going in, especially without a condition.
Yeah, it's a lot. I mean, that is a sizable risk for sure.
Yeah.
And I guess on your side, in order to even advise people, like here's the risks, and yes, in theory you can move forward.
Yes.
Again, documentation for you is like absolutely crucial. You need to have every piece of documentation, credit check, all that stuff, so that you're not going to have a surprise, when they get to the finish line on things.
Exactly. Like you got to be kind of conservative in this position because you're there to protect the client. So I would say that making sure I'm not telling someone something that I don't have a document to support is very important. Mainly because all lenders and banks are very heavy in documents and heavily document dependent. And so that's just how it works these days with lending.
Yeah, well, I know things like from what I keep hearing too, and I mean information fed from you, like things have tightened up a lot. So I mean, lenders have tightened up, and there's a lot more regulations, and people have to be very careful with how they tread through it.
Yep, and yeah, exactly.
Well, that's great. Well, thanks a lot for coming in. I really appreciate it. If people have any more questions for John, johnmavey.com, or you can email john@johnmavey.com, of course. Also, if you have questions for me, reach out through our website, ottawaishome.com, and of course, subscribe to our YouTube channel. Thanks a lot.